If you haven't looked at your retirement account balance today, you might be in for an unpleasant awakening.
Yeah, it's over concerns about the coronavirus. It's sending stocks down more than 1,000 points at the closing bell.
But before you worry about your portfolio, reporter Julio Avila joining us now in the studio. So you spoke with one expert who says we shouldn't be too concerned just yet.
Yeah, that's right. Well, even though, just take a look at all of these numbers, nothing but red and nothing but drops. And the real winner, sadly, in this game of risk, the coronavirus. But that's what economists are blaming. But they also say, don't sell those stocks just yet.
If a 1,000 point drop makes you nervous, then perhaps you shouldn't be in the market right now.
In other words, 3.5%. That's how much the Dow Jones fell today, closing at just under 28,000. But economics professor Robert McNabb says there have been much bigger drops in the past.
When news arises of a virus or a terrorist attack or a natural disaster, people can trade on the uncertainty. They could trade on the fear. If you're in the market for the longer term, it's very hard to ignore that fear, but you need to.
And you can blame the coronavirus, the deadly virus that's killed thousands in China and has now infected the global stock market. How so? McNabb says companies that have a big presence in China, such as Apple, have reported they can't meet their expected financial targets.
Apple assembles their iPhones and other products in China, and those factories have been disrupted. So Apple has already warned that they're going to miss their revenue targets for the first quarter.
But he says any losses now should level off in the weeks and months ahead. So what should you do?
Don't panic. The first thing to do is evaluate the news and evaluate how you're positioned in the market. Are you comfortable with the risk of increased volatility? If you're not, perhaps it's time to reconsider where you stand.
And if you are?
If you have a longer time horizon, you're younger and you're looking 20, 30 years to retirement, perhaps this volatility is something you could just ignore because you're going to be in the market much, much longer.
So if you're an investor, when would you need to worry? Well, McNabb says if the coronavirus becomes this global pandemic that's spanning across continents, then you would have a much more heavier impact on the global markets. You'd see slower growth and a larger drop, but he says he doesn't see that happening. In the studio, Julio Avila, News 3.